Hello traders, hope you're doing well. In today's video, we'll be discussing about a price action strategy using the Fibonacci tool. You can use this strategy in trading stocks, futures, option buying, not option selling. You can trade in Nifty and Bank Nifty. This strategy works best for both intraday as well as swing trading. As per the backtest which I have done, this strategy is given 86% success rate and the risk to reward ratio is very good. It is always more than 1:2. There are some rules which you need to follow to get the success rate. Please do not skip the video, watch this completely so that even you can use it. Even a beginner can use this strategy because it's very simple but effective. Now without further delay, let's get into today's topic. Traders, now I'll be discussing about a very important concept related to this strategy. So please pay complete focus and attention. I have taken Axis Bank chart 15 minutes time frame to explain this to you. Now if you see here on 28th of March, Axis Bank was trading at this level. The price of the stock was somewhere around 715 rupees. Now on 5th of April, this stock was trading at 795 rupees. So this stock moved up by 80 points. Now tell me, from 715, did the stock directly reach this level? No, right? We can clearly see that from this level, the stock went up, there was a good rally. After that, it created a swing high, then there was consolidation. You can call this consolidation, pullback or retracement, anything you want. I'll call it consolidation. Now after this consolidation, can you see the stock going up? After creating one more swing, this stock again retraced. Now after this consolidation, again a huge rally. After this rally, a small consolidation. Again after this consolidation, the stock rallied up to this level. Now small pullback. After this pullback, the stock went up to this level. You can pick any chart and see. If a stock is making uptrend, it will directly not go up. It will make small retracement or corrections like this before it reaches its final target. Now this is the basic concept of price action trading. Now why am I telling you this? I'm telling you this because we will be using the Fibonacci tool to enter at this consolidation level and take advantage of the market going towards the upside. Now during an uptrend like this, we can use the Fibonacci tool to find the support level. We can see where the market is taking support before it moves toward the upside. Now traders, let us see how to use the Fibonacci tool during an uptrend and identify important support levels. Now whichever broker you're trading with, everybody will have this Fibonacci indicator for free. The broker what I am using is Zerodha. Now if I just go to this left panel and click here, there are different indicators. The indicator which we are looking for is this Fib retracement, that is Fibonacci retracement. Now let us select this. Now let's say this is the starting point. If I start here, I want to end here. This is how the Fibonacci tool will look. It will have many lines plotted here and each line will be represented by numerical values. Now these are mathematical values. Let us not go in deep and discuss what are these values. Just understand these are mathematical values used in trading by very big players. They use this to find important support and resistance level. Now out of all these Fibonacci levels, there are only 3 Fibonacci levels which is very powerful. Those levels are these 3: 0.38 level, 0.5 level and 0.618 level. Only these 3 levels are important. If the market is taking support here or any other level, I will not consider this as a strong support or resistance level. This is very important. So whenever you're trading with this strategy, if the market is taking support in any of these 3 levels, only then it is a strong support. Now if you want, just click on this tool, go to settings and remove the levels which you don't need. Okay, you can keep only these 3, but for the sake of this video, I'll just leave it as it is. Now let us see how to use this Fibonacci tool during an uptrend. Now during an uptrend, the Fibonacci has to be drawn from the swing low level to the swing high level. Now for example, let's take this Axis Bank chart itself. Now exactly from this level, the stock started going up, right? It broke all the previous levels and it went above that. So this level, we can consider this as swing low level. Alright, from this level, the market went up, breaking all the previous levels. So this is swing low. Now exactly from this red candle, the stock price started going down here. So this level, we can consider this as swing high level. See traders, the stock went down, right? Please ignore all this. In live market, this and all you cannot see, right? From this level, just imagine the stock price came down. Now, if you want to identify the support level of this swing, we can use the Fibonacci tool. Now, if I just choose the Fibonacci tool from the swing low level, I bring it up to swing high level. Now here you can clearly see Axis Bank started taking support at this level. Now what level is this? This is 0.382 level. I clearly told you these three levels are important level. Now the market is exactly taking support at this level. Now after this, can you see the volume here? Compared to all the previous candle, we started having buyer's pressure from this level. Traders, here we can observe two things. After the swing high, the market came down. It is taking support at 382 level. Now after taking support here, exactly market is going up. Compared to all the previous candle, can you see the volume this candle is giving? This is clearly showing buyer's pressure. Now if you had entered the trade at the high of this candle, keeping stop loss as let's say 0.5 level and target easily we achieved up to 1 is to 2.6. Now this is how during uptrend you can use Fibonacci and identify important support level from where the market can reverse. Now some of you might ask me this doubt. You might tell me, sir, okay, we kept the stop loss here because 0.5 level can act as support level. We entered the trade here because we got volume confirmation. Okay. But how did we decide that this level should be our target? Correct? Many of you might have this doubt. Let me clarify that for you. Now, see traders, even in the live market, even I will not know exactly I have to exit at this level because I don't know the market will come down from here, right? Now, there are two ways how you can exit the trade. See, when you are making risk reward as 1 is to 2, you can exit the trade. But me personally, I will not exit the trade like this, even if I see a retracement like this. When I see a retracement like this, you know what I will do? First, I will remove this previous Fibonacci level. Second, I will consider this level as the new swing high level. Okay? Because this is no more a swing high. This is the swing low. This is the swing high. Because from here the market started rejecting. Correct? Now again, I will choose the Fibonacci tool. From swing low till swing high, I will draw the Fibonacci. Okay? Now tell me, after this retracement, where is the stock taking support? It is taking support exactly at 0.82 level. Let me mark this level for you. Now as soon as I see a pullback from this level, I will hold on to the trade. Now instead of taking support here, if the stock comes up to 50% level, that is this level, then I can exit the trade at cost price. But that did not happen. The stock took support here and again it is going back. Now at this time, a person who is willing to take risk like me, you can bring your stop loss little higher, exactly where you enter the trade. Again you can increase your target. You bring your stop loss to the cost price and you increase the target. Let the stock run how much ever it want. Now traders, always remember this, 0.82 level is a very strong support level. If the market is taking support at this level and going up, the trend will be very strong. This is the golden ratio of Fibonacci levels. Now some of you might ask me, okay sir, but how do I exit the trade? See traders, there are two ways. Number one, since I am a price action trader, what I will do is I will make use of the trend lines. See from this level, I will draw a trend line with maximum number of touches. Now when I see this level broke, the market went down, this is where I exit the trade. Now there is a second way how you can exit the trade. Let me show that to you now. You can use moving average indicator to decide when to exit the trade. Just go to indicators and search for moving average. Now you need to change the setting in moving average. Just click on setting, make it bold, increase the color, keep whichever bright colors you want, and then this length has to be 50. Now as long as the stock is trading above this level during an uptrend, I will hold the position. As soon as this 50 EMA level is broken, I will exit the trade. So this is how we can plan our exit. Traders, until now I've shown you how to use the Fibonacci tool during an uptrend and capture the good momentum in the stock. Now let us see during the downtrend how to use the Fibonacci tool. Traders, what I'm going to tell you now is very important. So please pay complete focus and attention. Now this is a chart of Bank Nifty 3 minutes time frame. 3 minutes is very suitable for intraday, right? Now if you see here, the market created a swing low and a swing high. From here we can see the stock price going down. Now this stock can go up or down, right? Now what we can do is we can choose the Fibonacci tool. Now since this is an uptrend, Fibonacci has to be drawn from the swing low level till the swing high level. Now let's observe how this market is moving. We can see that the market rejected the 0.83 level, but we cannot enter the trade here because the market can go down and hit a stop loss. So we will wait. The market is coming close to 0.5 level. It is rejecting from 0.5. Now if you see, we got a green candle, a very good bullish green candle. But I will not prefer to enter the trade here. Why? Because I am a price action trader, right? I will draw a trend line like this with maximum number of touches. Now only when this trend line is broken, I will feel confident to enter the trade. So as of now, we will wait for this trend line to be broken and it should close above the important Fibonacci levels to enter the trade. Let's see what happens next. It is not breaking the trend line. Traders, if you see this candle, it went up, but the market started rejecting here. So this is a very valid trend line. The market is respecting this level. The stock is again taking support at 0.5 level. Now traders, you can see this candle broke the trend line and it has closed above 0.38 level. So I would prefer to go long in the stock. I can keep my stop loss little below this, or I can keep my stop loss at 0.5 level. My target, I cannot keep 1:2 because this is the day's high. This previous high can act as resistance level, right? So what I will do is little below this previous resistance, I can keep my target, and my stop loss I can bring it up to this level. Then I can achieve 1:2 risk reward. But if you think keeping stop loss here, the market will hit this, then you can prefer keeping the stop loss here. But your risk to reward will be very small. Let's see what happens next. Now traders, we can see this candle achieved our target. Okay, this target. If you see how big this candle was, it gave a risk reward close to 1:2. Now those who want to exit the trade, you can exit the trade here. But I will not personally exit the trade. I will hold the position. Now traders, at this level we can see the market is rejecting, right? Now this swing high is no more a swing high. So we will bring the swing high level to here. So this is the swing low, this is the swing high. Here we have the Fibonacci levels. Let's see what happens next. The market broke the 0.38 level. It broke the 0.5 level. Now those who exited the trade, they already made profit, but I did not exit. So my stop loss got hit here because I did not exit at 1:2 risk reward. Now traders, here you need to note a very important point. When the market is retracing or when there is a pullback or consolidation, if the stock breaks all the three important levels, that means there is going to be a trend reversal. 90% of the time, the trend will reverse. So since the market broke all the three levels, I will no more look for buying opportunity. I will only look for selling opportunity. Now please pay complete focus and attention because I'm going to show you how to use the Fibonacci tool during the downtrend. So I have chosen Fibonacci. This is our swing high. We are just waiting for swing low. Now traders, see here, the market rejected all the important levels and it went down, right? So this uptrend is now, it has become a downtrend. Now during a downtrend, how do we use the Fibonacci tool? We use it exactly opposite of how we use it during an uptrend. Now during an uptrend, from swing low to swing high, we will draw the Fibonacci, right? But during a downtrend, the Fibonacci has to be drawn from above, from swing high to the swing low level. Okay, now let's see how the market is moving and how is it respecting the Fibonacci level. Now traders, we can see here the 0.38 level is broken, the 0.5 level is broken, but 0.618 level is not broken. Now this next candle got rejected exactly at 0.83 level. So this candle is confirming to us that the market is going towards the downside. If you look the futures and option chart of Nifty Bank at this time, you can see that there will be a very good volume. Now there are two reasons why I will prefer to enter the trade here. One, from swing high, if I draw a trend line, market rejected this level. Second, the stock went down up to 0.3 level with volume. Now this is where I will start looking for selling opportunities. So I will enter at the low of this candle. I don't want to keep it at 0.5 level because the market can quickly go up, touch this level and come down. So I'll keep it little above that, and my target I can either keep here, which is the day's low, or I can keep 1:2 risk reward. Now let's see what happens next. Now traders, you can see here at this level our target got achieved. Our stop loss was not hit. The risk reward we got is 2.25. Now either we can exit the trade, but what I will do is I will draw the trend line like this, touching all the levels. If I get a breakout from here, only then I will exit the trade. Okay, at this level I got a breakout, so this is where I will exit the trade. Now some of you might say we should have exited the trade here and all those things, but I wanted to capture the momentum of the market. What if the stock goes even lower than this? But when the market stopped respecting my trend line, that is when I exited the trade. Even if I exited here, I would have made around 40 to 50 points profit. So this is how during the downtrend you have to use the Fibonacci tool. From top swing high to swing low, you should draw the Fibonacci levels. Now traders, I hope you understood how to draw the Fibonacci levels, how to use it in the live market. I hope you enjoyed this video and it was useful for you. It takes a lot of time for me to create such content. Please like and subscribe to this channel and don't forget to press the bell icon. Now that's all for this video. I'll see you in the next one.